banking system is failing the country once again. At the current pace and condition, the collapse of the system is inevitable if the authorities don't make correct decisions. We are on the verge of a crisis like in 2008, when the world's financial stability was shaken. A new study by Social Science Research Network estimates that 186 other banks are at risk of failing, like the now doomed Silicon Valley Bank. Even if only half of the uninsured depositors decide to withdraw, almost 190 banks are at potential risk of impairment to insured depositors, with potentially $300 billion of insured deposits at risk, study says. In this episode, we will discuss the risks of America's financial sector and 186 banks that could share the fate of Silicon Valley Bank and Signature. But before doing so, consider subscribing to the channel to ensure the production of more content on the most important economic topics. So, we are in a global banking crisis. The primary question is, what just happened? On March 10th, SVB, the largest banking collapse in the US since 2008, was seized by the Federal Deposit Insurance Corporation. The bank's troubles began 48 hours before, when it suffered a significant loss while cashing out US government bonds in order to fund depositor payments. In an attempt to stabilize its finances, Silicon Valley Bank unsuccessfully attempted to sell shares, which triggered a panic and ultimately led to the bank's failure. In addition, Signature Bank was closed by the FDIC when its customers withdrew a large number of deposits due to concerns about the collapse of SVB. Both banks had a relatively high proportion of uninsured deposits to support their operations. The main problem that caused the crisis was the high interest rates of Federal Reserves. Economists agree that SVB's downfall was triggered by the Federal Reserve's decision to increase interest rates significantly in order to combat inflation, which served as a catalyst for the decline. As a result of this reversal, the value of SVB's assets tied to long-term U.S. Treasury bonds plummeted. At first, the Fed tried to catch up by aggressively raising interest rates. Then the Fed's actions led to higher borrowing costs. As a result, bond market saw the most significant decline on record in 2022. In the end, SVB's collection of long-term securities, which accounted for $91 billion was valued at only $76 billion by the end of 2022. Also, the value of assets that banks keep track of regularly has decreased by about 10% on average for all banks. The worst performing banks, the bottom 5%, have seen a decrease of 20%. Moreover, S&P Global's data reveals that almost 94% of the bank's deposits were not insured, which is significantly higher than the national average of 50%. This made Silicon Valley Bank more susceptible to the possibility of a run, which unfortunately materialized into reality. The customers of the bank withdrew $42 billion within a day, resulting in a negative balance of $1 billion for the bank. Within days, the federal government intervened and ensured clients would get their money back. This step will ensure that the U.S. banking system continues to perform its vital roles of protecting deposits and providing access to credit to households and businesses in a manner that promotes strong and sustainable economic growth, the agencies said in a joint statement. Americans can rest assured that our banking system is safe. Your deposits are safe, Biden said from the Roosevelt Room. Let me also assure you, we will not stop at this. We will do whatever's needed on top of all this. This way, the collapse of the whole financial sector was avoided, but nobody knows for how long. Basically, the U.S. Federal Reserve has promised to protect all the money that people have put into Silicon Valley Bank and Signature Bank. This means that if something were to happen and people lost their money, the Federal Reserve would have to pay out up to $140 billion to make up for those losses. However, the story does not end there. On Wednesday, the U.S. Central Bank said that they're increasing the benchmark interest rate by 1/4 percentage point to a range of 4.75% to 5%. This is the 9th time in a row they've raised the rate, and it's now the highest it's been since 2007. Just a year ago, the interest rates were almost at zero. Thus, for Fed, the prices of goods and services are more important than the stability of the financial system. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, Fed Chair Jerome Powell said. It's important that we sustain that confidence with our actions as well as our words. How Fed's action will affect the vulnerable banks? Well, this may be the beginning of a domino effect. As a reminder, around 500 banks collapsed during 2008-2015, which may be the case today if the crisis continues. In just 3 years, from 2008 to 2010, almost 300 banks failed. According to the mentioned research, first, if a bank's liabilities exceed the value of its assets, it may become insolvent. This is particularly likely for banks, which need to increase deposit rates as interest rates rise. Second, uninsured depositors may become concerned about potential losses and withdraw their funds, causing a run on the bank. Simply saying, almost 200 banks may bankrupt if depositors lose confidence in financial institutions. As for now, SVB and Signature Bank's collapse was eased by the government. Plus, the banking industry in the United States has merged together to help out other banks in the region. The 11 biggest American banks, such as J.P. Morgan, Bank of America, Citigroup, and Wells Fargo, helped First Republic Bank by giving them a $30 billion deposit. However, the bank still has significant problems. A financial expert, Manan Gosalia, recently wrote a report about the First Republic Bank. The report said that the best possible outcome for the company would be for its shares to reach a price of $54. Unfortunately, the shares actually dropped by 15.5% and closed at $13.33 on Wednesday. The reason for the optimism was that the government would insure all deposits made by customers, which would bring back most of the deposits that had been lost during the banking crisis. However, that hope was reduced because the government isn't planning on doing this without approval from Congress and is only reviewing the risks on a case-by-case basis. I have not considered or discussed anything having to do with blanket insurance or guarantees of deposits, Treasury Secretary Janet Yellen said. On one hand, the authorities are trying to avoid the word bailout, as it has a bad connotation since the 2008 economic crisis, when taxpayers paid for the mistakes of large financial institutions. On the other hand, it is hard to calculate how the government's policies affect the confidence of citizens who have their life savings in banks. David Smith, professor of commerce at the University of Virginia, said, depending on how much the FDIC has to drain their deposit insurance reserve to cover depositors now, they might have to charge banks higher fees to replenish that reserve. This will pass the cost on to the consumers, which means that banking services may become more expensive. Either way, it seems that taxpayers will carry the burden. Apart from banks' asset value depreciation, high interest rates may affect the following. Home loans, auto loans, or student loans will be higher. So, anyone shopping for a new home or a car has lost considerable purchasing power, partly because of inflation and the Fed's policy moves. Lastly, as more and more people are able to use banks around the world, we can't ignore the changes and ups and downs that happen in the banking system. Even though Switzerland is far from the United States, what happens with its banks can have a significant impact on everyone. One of the biggest banks in Switzerland, Credit Suisse, has failed. Like we already said, It's crucial for banks to have the trust of the people who put their money there, no matter how big or small the bank is. Thank you for watching. If you enjoyed the video, hit the like button and subscribe to the channel.